The world of options is a maze, especially for the uninitiated. A multitude of strategies, each shrouded in esoteric jargon, and formulas that look like secret languages that keep most outsiders too intimidated to seize the endless opportunities this market makes available to them. And that's because on this treacherous journey of options trading, there are unfortunately cons, formidable risks that lurk in the shadows, variables that throw most beginners for a loop. Our first con is time decay. As I mentioned in video number 2 of this series, trading options is a lot like trading on a shot clock. This is because these contracts come with an expiration date. The more time that passes without price surpassing your strike, the more value of your options will crumble. This is time decay, also known as Theta, an impeccable foe which we'll be discussing more in depth throughout this series. Volatility. This is another one of the Greeks, which we'll be covering in later episodes, but what you need to know today is that this is a key component and one of many risks baked into the price of options contracts. Anytime you buy or sell an options contract, you're paying for a certain amount of volatility, or expected future price movements. This means that if price moves in a fashion you're not prepared for, or even worse, grinds to a boring halt, you could end up on the wrong side of an options trade. Counterparty risk. Unlike in basic spot markets, options trading is a zero-sum game. This means that for every winning trade, there is a loser on the other end. It's a financial blood sport, and if you wish to survive, you have to stay one step ahead of the competition. Remember, if a trade seems too easy, or the contract pricing seems too good to be true, that usually means that it is. But as part of this series, we'll later teach you how to better identify these setups that offer the greatest balance of risk versus reward, so that you won't be the market's next victim. For more in-depth information on options and how to trade them with efficiency, follow along with us into the next episode of this series.